Hello again, traders, and welcome back to the Hot Stocks Outlook for November 15th, 2024. I hope you all have had an excellent week out there in the financial markets. And as always, we're going to take a look at the most recent VantagePoint AI predictive forecast. So if you haven't already, make sure you go ahead and click on that link down in the description below and get yourself signed up for a live demonstration so that you can learn all the specifics about how these predictive technologies are helping traders make much better trading decisions out there in the marketplace. Now, as we typically do, we can start out by looking at the S&P 500 via our SPY ETF. And so this just lets us know over some of these spans of time where the market is here, right? So past 12 months, we're up over 32%. That takes the year-to-date number since January solidly over 25%. But more recently, really post-election, we've seen the equity indices actually run sideways. And this is why it's especially important to really have the right tools and anticipate where that strength is, but also really identify markets where you may just want to avoid and where some weakness is coming in. So let's start out with shares of Lululemon. And this is a really good example of how all of these predictive tools work together, whether that be the VantagePoint predicted moving average that you see against the price. At the bottom, we have our VantagePoint neural index, which is updated after every trading day. And of course, the forecasted predicted high and low ranges, which we look at week to week here in the Hot Stocks Outlook. And so the first thing that we want to understand is that all of this price data is end of day data. So each one of the candles that you see is representing a full and complete trading day. And it's right up against that price data that we're first going to identify that black and blue line value. And so what that black line that you see on the chart is actually a simple moving average, or what we refer to as the actual or a lagging moving average, because all of that data comes from the past. So in this case, it's a 10-period simple moving average. It'll take the last 10 close prices, add them all together, and then divide by that number. And for VantagePoint users, this acts as a solid baseline, right? To let us know where market prices have been. But traditional technical analysis has a real weakness in that all of the data to generate a moving average like that comes from the past. And it's also looking at Lululemon in isolation as if it's not affected and as if there aren't some very valuable price clues that can be extracted from other related markets. And so what we're able to do is compare those two values. So whenever that blue line crosses above the black line, what's suggesting average prices are going to start moving higher, and traders may want to look to take a long position. So we see here, since that signal had come through, the market's up over 22% in just the past 30 trading days. But what's important to understand is that this is where the technology of artificial neural networks come into play, and they're performing what we would call intermarket analysis. And so what that means is that there's very important price clues that can be extracted from other markets and can affect how the future price of Lululemon performs. And so this can be pretty obvious things like the broader market indices, whether they're overly bullish or bearish, but it's also able to look at ETF groups, which may share some important market relationships in addition to even individual stocks. And so what you need to understand is some of these relationships can be leading or lagging relationships. Some can be positive or inverse correlations. And that's where the technology of artificial neural networks really does a great job here and does a level of analysis that humans just simply couldn't manage. And so this will go all the way down the line. If you're looking at gold mining stocks, it'll look at gold futures contracts or silver. And so it's taking the applicable markets, really dozens of known markets that share these relationships, and using that to generate these highly accurate predictive forecasts. So whenever traders see that signal as far as that predicted moving average moving above the actual moving average, well, it's suggesting that prices are likely to rise towards that average. Now, at the very bottom of the chart, you'll also see this bar, our VantagePoint predicted neural index. It goes from bullish to bearish, back to bullish. This is also utilizing that technology of artificial neural networks, but it's tuned to solve a different problem, right? So the output we're trying to get and leverage those neural network relationships is a little bit different. And so what it's doing here is just looking over the short-term 48-hour window of short-term strength or weakness over, again, that very short-term window. So every new prediction is essentially a new prediction of strength or weakness, and it gets this right with a very high level of accuracy, well north of 80% on a very wide number of markets, whether it's Lululemon or gold futures or the dollar index or Macy's stock. And so this is helpful for shorter term traders and also trend traders to anticipate potential weakness in the market. So as we look at many of these examples, you'll see the neural index goes bearish. It spends the most of the time here, obviously bullish, but we'll see those examples where you potentially get some short-term weakness over the next couple of trading days, but that short-term weakness in an overall uptrend. And to really round out these forecasts, of course, we're also provided our predicted high and predicted low trading range. And so this is where things get really exciting as far as traders understanding that, okay, well, if we know the overall trend is to the bullish side, we may be getting some short-term weakness over the next couple of trading days, but VantagePoint is going to pick out these predicted lows where traders may want to accumulate a position. And so why this is really exciting is because how this really adapts day to day. And so you see that even when you get all this volatility, you see the range expands, but you see the market still wants to come down towards these predicted lows before it then makes that uplift and the overall trend resumes here. So really nice opportunity in shares of Lululemon. And of course, we'll take a look at more of these examples because all of these predictive indicators really work the same way. So again, about a 20% rally just over the past 30 trading days. Here's shares of Live Nation. And so another example where we see that blue line crossing above the black line, neural index, very bullish. And so you'll notice that when that neural index is bullish, when the trader's actions really match the accuracy of that forecast, well, you could potentially have numerous short-term opportunities there. We're taking profits as the market moves higher. You get little blip here, a little blip here, a little blip here, a little sideways here. But overall, the trend is bullish. And all that neural index should do is say, okay, well, look for some short-term weakness here. But you see this market's already up about 33%, right? So when we see that, okay, well, the neural index is getting bearish here, you can anticipate that sideways price action. But as long as the trend remains up, well, you want to stay involved. And we see the market continues its advance higher, really propelled with some earnings there. So really nice move there in Live Nation. Here's Royal Caribbean, which we took a look at last week, and I just wanted to go ahead and update things where very similar approach. That blue line crosses above the black line. You'll notice that momentum really picks up when you have that combination of the trend strength with that short-term, very highly accurate output from the neural index. Now, when that neural index goes bearish, you see that's where we start to get this consolidation and sideways price action before we run into earnings and the overall trend resumes higher. So again, really great examples here of how all this works together. So even after earnings, you see, okay, well, the trend is up, a little bit of short-term weakness from the neural index. And sure enough, that's actually a great opportunity to buy on the uptrend here. We see it again more recently, neural index bullish. That's where you're seeing the gaps and the momentum pick up. But more recently, it's saying, hey, actually look for some weakness here over the next couple of trading days. And again, we see, again, just some broader market weakness starting to creep into things and just may weigh down the portfolio and, of course, individual stocks. And so this is really what I wanted to highlight is that there's a lot more weakness out there than the index would suggest. And we're seeing some individual stocks where the last thing you'd want to do is anticipate strength as we're seeing some markets go lower. So Nike here's had a lot of trouble recently. Here you see that predicted moving average crossing below the actual moving average. And additionally, same thing, this combination of these tools, if you're constantly relying on getting the overall trend direction and then leaning on this 80+% accuracy indicator, well, you've got that combination of trend and short-term momentum. And you see that's where we get that aggressive move lower. We start to consolidate. See the neural index goes bullish. You get these consolidation periods. But overall here, the trend is still decidedly bearish. And of course, as we look at those predicted highs and lows, I mean, some of these things are pretty phenomenal as far as moving up to the predicted low and then that weakness pretty much immediately playing out when we see this combination of factors. So we start to move a little bit higher here over these trading days, but clearly you only want to be short, take profits on shorts, really makes the most sense here. So strong move to the downside here in shares of Nike. And again, if we get broad-based weakness, we may see these things go lower still. Now, of course, in the future, we may get some crossovers to the bullish side, and that would, signal a reversal in the overall trend. And that's how traders identify some of these new shifts and new opportunities in the market. So here you see off about 7% just in the past 18 trading days. Utilities have also been quite weak. So whether we look at we could think about this in some of those intermarket relationships, right? So you see a lot of similar signals and forecasts from the utilities ETF, in addition to a lot of those other utility stocks. And we see broadly the whole sector starts to creep lower here. And when we look at this and say, okay, well, if we're looking for areas where we expect the market to short and go lower or creep lower, you see overall this moves about 6% decline. But how many opportunities as the trend goes lower? So in the more shorter term sort of a concept here of looking towards these predicted highs to actually short the market. So these movements higher, you see constantly move up sometimes that previous predicted high. and then the overall trend resumes to the bearish side. But very clearly here, even through the election, some markets performed extremely well here, right? So here's the election date. Not here in utilities, very strongly in a downtrend. So even if the S&P goes up 2 or 3%, you're still seeing these markets in downtrend really not following suit, and certainly an area where you may want to hedge your bullish positions in the portfolio or just avoid until we start to see those bullish forecasts come back into play. Lastly here, Pfizer, really great example here again of seeing some of these markets that are excessively weak. So blue line crossing below the black line, you really only get one day here right before earnings, where that neural index flips bullish. Again, recently getting a day, but very clearly here, as we start to see that distance between the blue and the black line really start to separate, what's telling you that prediction of the average is getting more and more extreme. So we can again think of, those intermarket relationships here. Well, what are they queuing in on Pfizer? Well, they're skewing these averages more and more bearish to help us identify when the trend shifts, but also how extreme that trend is getting and how those intermarket relationships are really playing on the future price of whatever that target asset we might be trading is. So again, really good examples. Again, a lot of diversity here as far as the market. Some things doing well, responding to the election results, other things doing really poorly. And this is where VantagePoint traders can utilize tools like the VantagePoint IntelliScan. So there's actually features here that allow us to scan for fresh signals created by these predictive indicators, whether that be the predicted moving average, configuration of the neural index, or the direction of our predicted high and low range. And this allows traders to really be delivered with these things as they occur, right? So you're not missing these fresh opportunities when they come through. So again, just really exciting opportunities throughout the marketplace. A little bit of volatility potentially at current prices that you want to be aware of. But still, VantagePoint performing extremely well, regardless of bullish, bearish, short-term, long-term, providing some valuable insights to lean on here. So once again, this has been our Hot Stocks Outlook for November 15th, 2024. Thank you all for watching. Best of luck and bye for now.